And there you have it. The markets are officially closed on the last trading day in July, Wednesday, July 31st. Here's a daily candle chart of DIA, which is the Dow Jones Industrial Average ETF. And if you zoom in here, you can see that we have a shooting star right on that day with today's high matching very closely to the highs that we had back earlier this month. Now, look at that big volume candle. That's a sign that there was a battle between the buyers and the sellers. And if you look at the last minutes of trading here today, you can see that right from 3 o'clock, the last hour, we had a pretty heavy sell-off right up until the close. And that tells us that there is still selling pressure coming into the markets. Now, a lot of what we saw today was on the heels of the Fed making an announcement that they're keeping rates unchanged right now, but they're setting their sights on a cut in September. We call that the Fed put. Some of you already know this term. This is when the markets look like they're under some pressure and the Fed comes in to the rescue and they start talking about cutting the rates. That obviously adds some support as the FOMO investors and traders out there cling on to that bullish strategy. You have to be very careful with this, folks, because as I've been mentioning over and over for many months, I'm expecting a very significant sell-off in the markets. This Friday, I'm going to be making an announcement, so stay tuned to the weekly market report as I give you the technicals based on the monthly candle charts. So again, going back to the dailies, that bearish shooting star right there tells me that we are most likely going to go lower. So my downside target's still in place right there at 395.69. You could also see down below that we have a negative divergence in that CCI, and we have a pretty big negative divergence on the stochastic as well. So that is DIA. If we look at IWM, we have that big green candle for most of the day. And again, at the end, we had that big, massive sell-off right up until the close. So the sellers beat back the buyers. Again, a shooting star right there. Downside target still in place for IWM at 208.58. Taking a look at the Qs, if you recall from last week, I had an upside target. That was the upside target that I put last Friday at 476.39. I do think that we could hit that tomorrow. As you can see here, we have a gap that's still open that will act as a price magnet until it fills, and then you get a resistance point forming that could match perfectly with that 20-period moving average right there at 482 and change. So my upside target's still in place for Qs at 476.39. Looking at SPY, you can see that I had an upside target there from this point right there, which was 550.63. We hit that today like a charm. I do think we could go a little bit higher towards the end of the week. We'll see whether or not that moving average holds as resistance or whether or not we can get a break at it. If you look today, not only did we hit my target right there, but we filled that gap perfectly. So 80% of the time gaps fill. And if you've been following along with my gap fill rules, you know that after the gaps fill, there's an 80% chance that prices could reverse. So we'll have to see whether or not that moving average holds as resistance. If it does, then we could wind up with lower prices down the road. Moving on to the VIX, you can see here that we are getting very close to my downside target on the VIX at 1523. Look at the CCI down below. The CCI is continuing lower. If we hit that zero line, which is the black line right there, also known as the momentum line, we could see continued prices lower on the VIX, which would mean that the S&P will be slightly bullish. Again, my long-term outlook is that we'll eventually see a crash in the market. I'll talk more about that on Friday, but that is something that you have to keep an eye on. Our plan at Sticky Trades is to make money up, down, and sideways. And if you are interested in that 15-day free membership, tonight's the night you would sign up for that, because if you take a look at my spreadsheet here, this is a list of my rapid fire stock analysis picks that were given to us by our members. You can see the names of each member is there next to the ticker symbol. For in 1 week, in 5 trading days, we have a 40% target hit rate already. And if I go back in time, I'll scan through this. These are actual stocks and actual people that submit this. The week before last, we now have a 67, we're approaching 70% hit rate there. The week before that, you could see as I scroll that we have a 73, almost 74% hit rate. And as we go back in time, you'll know that my percentages increase. My current hit rate is the best in the world at 82% target hit rate. No one in the world can even come close to that. If you are close with your stock picks, I would love to get to know you and have a webinar where you and I can talk about stock picks and talk about targets. But right now, no one has stepped up to show any kind of numbers like that. We have everything documented. Our website shows the rapid fire results. You could go as a member, type in any ticker symbol, and the website will show you just how many times I've analyzed the stock and how many times the targets have hit on that stock. Again, tonight from 6 to 7, rapid fire stock analysis. You could submit the ticker symbols. We will analyze them. My goal is to analyze 60 stocks in 60 minutes. We've been keeping up with that pace for a good long time right now. So we'd love to have you join us. Again, it's free. No credit cards needed. You try it out for 2 weeks. If you like it, then join up. If not, we part friends. No pressure whatsoever. Folks, thank you so much for watching and commenting and liking. We really appreciate that. We'll talk to you on Friday. So long.